Yes, people really are making steady income by selling put options. I've been doing it for years. When I first heard you could get paid up front to buy a stock that you already liked at a price that was even lower than what it's currently trading at, I thought it sounded too good to be true. But then I tried it and I was hooked, and I've been doing it ever since. But if it's really that powerful of a strategy, why doesn't everyone sell put options? I've used selling put options to enter long stock positions. I've also used selling put options to repair trades. And what I really like is I've used selling put options to generate consistent income. But there are very real reasons why some traders and investors will never sell put options. But here's what might be surprising to you. Those same reasons why some people avoid selling put options altogether, they are often the exact same reasons why selling put options works so well for educated traders. And one of the simple put option strategies I use, I'm going to share with you, has quietly outperformed a lot of the flashy get rich ideas in my own accounts. In just a minute, for those of you who are newer to option trading, I'm going to explain what exactly does it mean to sell a put option. But now I'm going to answer the question, if selling put options can be so effective, why don't most investors use them? There are several reasons for that. I went to university and got a marketing degree with a minor in finance. Yet nowhere in that whole 4 years was the term options ever even brought up. So even in higher education, option trading is not taught in school. And the financial media and the ones who pay to advertise on financial media stations, they're not incentivized to teach you about selling put options. You see, they're paid by assets under management, not you doing it yourself. And for that same reason, brokers and advisors, they have zero interest in teaching you because, again, it will take money out of their pocket. As a result, selling put options has been labeled as scary or risky, or you can lose all your money if the stock drops. But let's be honest here. You can lose with any strategy. However, if you understand how to sell put options and trade it properly, they're not scary or too risky. They're actually a very smart strategy that a lot of shrewd investors use. But first, if it is a simple concept, what stops people from ever selling their first put option? I'm going to answer that in just a minute. But now, for those of you who are newer, I'm going to explain simply and briefly what selling a put option means. When you sell a put option, you get cash today. You're selling something, so you get paid for that product or that service that you're selling. And what are you selling? You're selling someone the right to buy 100 shares of their stock at a certain price up to a certain date. That certain price is known as the strike price. And the certain date, that's the expiration date of the option. So what happens when you sell that put option? Well, if the stock stays above the strike price that you sold them, then you do nothing. You get to keep that premium and you don't have to buy any shares. But if the stock drops below the strike price of the put option you sold them, then you buy the shares at that discount, at that strike price that you approved when you sold the put option, or you can adjust the position to prevent that assignment from happening. Now I have a whole video playlist. I'll leave a link above and also down in the description about how to repair positions that go against you. Just know you don't have to take assignment of that put option if you don't want to. But that's the two things that can happen if the stock goes below the strike price of the put option you sold. So if done properly, another way to look at this is that you're getting paid up front to place a limit order on a stock at a price that you'd like to own it at. In just a minute, I'm going to answer the question, how do you sell a put option in a way that keeps the risk under control, lets you pocket some nice cash, but still lets you sleep well at night? But now let's discuss the answer to the question, if selling put options is so simple, what stops people from ever selling their first put option? The first one is fear that that put option that you sold will be assigned to them. And that would happen maybe if the stock crashed. But remember, you're selling that put option at a strike price you're happy to own the stock at. You pick the stock you sell the put option in, and you pick the strike price. But in spite of that, they're still scared of that. But in reality, they're facing very similar risk if they own shares of that stock. Another thing that prevents people from selling them is fear of big losses. They hear that unlimited downside risk and they don't dig any deeper. When they hear that, they shut down, they move on to the next idea. And the third one is a big one. That's why I put it in red for you. It's the misuse of margin. Maybe they've heard stories of people who sold put options and they lost big time, or maybe they owe their broker money. Well, that only happens if you misuse or abuse your margin. If done properly, that doesn't have to happen. And a fourth reason is just the psychology of fear and greed. In this case, fear. People don't want to commit to buying shares of stock when things are scary. When you look at the history of all successful investors, that's generally when they make their most money. When markets or stocks crash and they're buying good, solid companies. But that fear prevents people from selling their first put option. But just know that from my own personal experience and from the experience of all the traders that I work with, most of the fear comes from two things: using too much leverage and selling put options in stocks that you don't really want to own. And the reason you don't want to own them is because they're low quality or very low profitable companies. In just a minute, I'm going to answer the question, Can you sell put options in a small account? But now let's answer the question, how do you sell put options in a way that will allow you to control your risk and let you sleep well at night while still pocketing some nice cash? Well, there are several things you want to keep in mind when you're selling put options. First, only sell put options to companies that are fundamentally strong, that have a nice history of being successful in many different types of markets. Before you sell a put option, think about it this way. If this put option was assigned to me tonight, when I wake up tomorrow, would I be okay owning the shares of that stock? If not, don't sell the put option. Then when it comes to picking the strike price of the put option you sell, only pick strike prices that you'd be happy or very comfortable owning that stock at if it came to that. And for me, that usually means selling put options at strike prices that would mean I'm buying the stock when it's undervalued, or at worst, fairly valued. But at all times, they're at strike prices I feel comfortable owning the stock at. And a third very important consideration when selling put options that will allow you to pocket nice cash but also sleep well at night is your position sizing. My personal rule in my larger account is if all the put options I've sold were assigned to me, I prefer the position to be 2 to 3% of my overall portfolio, maximum 5%. Now, in my smaller account, I can't stick to that rule, but at most I want to have 5 to 10% in any one stock. And if it's an ETF, I do allow that percentage to be higher, around 20 to 25%, depending on the ETF. And then when it comes to should you use margin or cash, and especially for inexperienced and newer traders, I encourage you not to use margin. Use a cash account. Make sure you have the cash set aside to buy every stock for the put options you're selling. And if you want a little protection, instead of just selling cash secure put options, you can consider doing spreads. And I have a whole video playlist I'll leave a link to down in the description below about credit spreads. In just a minute, I'm going to answer the question, does selling put options actually make a difference? Or is it just a few dollars in my pocket here or there? But now let's discuss selling put options in smaller accounts. I'm now sharing with you the charting system I use, which is TC2000. Notice the number of stocks you could trade with a smaller account and still keep your position sizing in proper perspective. I've sorted this list by price, and just notice the number of stocks you can trade in that have a current price of under $40 per share. Now they go this way, so I'm going to scroll up. So just look at how many stocks are on my watch list that I could trade in that have prices under $40 per share. And here you see a snapshot of my smaller account. You'll notice some lower price names here, including ARCC, Campbell Soup, EPD, GIS, MPW, and Merck. So if you're trading in a smaller account, you can either use ETFs or you can trade some of these lower dollar stocks that you feel comfortable owning. You just want to make sure, especially if you're just starting out, that you place your strike prices at spots you'd be very happy to own the stock at, even if it means you get a lot smaller premium. You can always raise those premiums over time if you feel comfortable. And if you want to control your risk, you can always do a spread instead of just selling a put option. And here you see an example of that in my smaller account. Notice I've done a spread at ARCC. I sold the $19 put option and I bought the $16 put option for protection. So really, I only have $3 per share at risk in this position. Now I'm prepared to let those $19 put options be assigned to me, in which case I'd have a lot more at risk at that point. But right now, I only have $3 per share at risk. And since I've sold 2 contracts, I have 200 times $3 or $600 at risk if ARCC were to crash below $16 before expiration. In just a minute, I'm going to answer the question, what happens when a trade doesn't go your way? The stock crashes below the price of the put option you sold. We'll talk about that in just a minute. But now let's address the question, can selling put options really make a difference? Can it really put substantial cash into your pocket over time? Or is it just YouTube talk to get people to click on videos? I have a lot of examples I could have shared with you, but I chose to share just one here, which is a company that probably everyone watching this video knows and probably most of you use, and that's Amazon. This is a spreadsheet that shows all the options I've sold against Amazon in my larger account since August 4th of 2021. Notice this column on the far right, cash so far. That's the profit and loss column reflecting all the options I've sold at Amazon over the past several years. And just notice that it's not a perfectly smooth ride, but overall notice that over time, the cash so far on P&L, it goes up. There are some bumps in the road. Here you see that at this point, we're up $4,000 in Amazon over the previous several years. Then it dropped back down to $3,700, $3,800, $3,700, but then we're right back to making profit again. And currently over the past several years, I put a net of over $7,000 in my pocket and just trading put options in Amazon. One reason why I picked Amazon is that I've never allowed this stock to be assigned to me. I've always just rolled the put options if the position went against me. But overall, you see, nice premium, and this is over a 4-year time frame. So can it make a difference? Well, this is just one of many positions I have ongoing. And right now I'm actually short some Amazon put options at the 205 strike price. So overall, I think you can see how this can move the needle. This can make a difference. It can put nice, consistent cash flow in your pocket if it's done right. Premiums might look small when looked at by individual trades, but over time, week after week, month after month, year after year, they can really add up. And Amazon is just a nice example of that. For example, here you see we sold this one for 86 cents and we did one contract. So that was only $86. We ended up making really nice profit on it when we bought it back for only 7 cents per share. And of course, there's some others that are a lot more premium. But individually, the premiums might not seem like much, but over time, it can really add up, as you see here on the far right. With this strategy of selling put options, we're looking for consistency. We're looking for consistent income. We're not looking for those one-off home runs. We want consistent cash flow. So you might be thinking, well, Randy, that all sounds pretty good. But if that's the case, why still haven't more investors sold put options? I'm going to answer that in just a minute. But now, what happens when a stock goes against you? When the position doesn't go your way and the stock drops way down in price? Well, there's really 3 scenarios you can consider. The first one, I'm going to share with you a real life example in just a minute. But the first thing that I typically like to do is if a position goes against me is roll that put option out in time and roll the strike price lower. And if you know me, I always want to try and do that for a credit, even if it's a small one. And here you see an example of that exact strategy. And I just did this about a week ago. So I previously sold the December 19th $65 put options against PayPal. Well, the position has gone against me and there wasn't much time value left. I didn't really want the shares assigned to me, so I rolled this position out as I rolled it down. To do that, I bought back those December $65 put options and I sold the February $62.50 put options. I didn't get much of a credit, but I did get a credit. I got a credit of 10 cents per share. But notice that I improved my strike price by $2.50 per share. Notice up here in the snapshot I sent to my patrons of the exact trade I did, that I bought the December 65 put options back for $6.81 per share, and I sold those February 20th $62.50 put options for $6.92 per share. So right about 10 cents per share cash in my pocket, even though I was rolling this position out and rolling it down or improving the position. Now the next scenario is another strategy I like to use. I'm going to share another example of this with you. That's if the stock price drops below the put options you sold, you're okay taking possession of it, and let the put options be assigned and turn it into a covered call position. And here you see an example of a ticker symbol I allowed that to happen. It's ticker symbol TSN, Tyson Chicken. I've been selling some put options in it, and eventually, as you see here in the yellow, they were assigned to me. So I simply turned them into a covered call. I was in this position for quite a while, but not only did I begin to collect covered call premium, but I also got that nice Tyson dividend. And in the end, ended up with a net profit of $14,889. So if you're willing to take assignment of a company like I was here with Tyson, just turn it into a covered call. And if it's a dividend paying stock, you get the extra kicker in that dividend cash every quarter or every month. Now the third scenario is one that none of us like, and that's when something breaks in the company fundamentally. And as a result, I don't want to own the shares, and I don't want to be selling put options against a broken company. Now this doesn't happen very often because I do research my companies very thoroughly. And although we do have positions that go against us, we don't have a lot of situations where a company breaks fundamentally. Well, I'm now afraid to be an owner in that company. But when that does happen, I just take my loss, I close my position, and I move on to the next opportunity. In just a minute, I'm going to give you 4 simple rules I would make sure I understood if I were just starting out today selling put options. But now let's address the question, if this system works, which I think I've proven to you that it does work, and if it can be managed properly, why still don't more investors use it? Here are the reasons I figured out why people still don't sell put options. Because you want to make sure that it is a right fit for you. Number one, it requires some work. You shouldn't just sell put options in any ticker symbol you run across on Reddit or here on YouTube. It takes some time and effort to sell put options in a smart way. The second one is, it can feel kind of boring. I'm gonna tell you, a lot of the easy money I've made in my life is from boring things. A patron told me the other day, I think boring is beautiful, and I agree. When it comes to finances, I think boring is beautiful too. But that's not the headlines you see on YouTube. That's not the videos you see exploding. The ones you see exploding are these flashy lottery style trades. But in reality, the ones that generally work over time are not those flashy lottery style trades. They're strategies like this. The third reason is similar to the second one, which is this is a slow, steady, and repeatable process of making money. So because of that, it's hard to hype it. It's hard to dramatize it. And so it can be hard for some people to get excited about. The other one is really a psychology issue. People are uncomfortable committing to buying shares of a company when the stock price has dropped. But I'm gonna tell you, if you're a seasoned investor, you know that that's the right time to buy if the company hasn't fundamentally changed. In fact, That's the time you should be buying. Not when stock prices are way too high. You're dealing with overvalued companies. My belief when it comes to viewers who don't trade this strategy is that you're not doing it because you're not smart enough. I think most of you are smart enough. You're not doing it because you've never been taught how to properly trade put options. Now I want to share with you 4 simple rules that if I were starting over, I really want to make sure I understood. This will give you a nice foundation when it comes to selling put options. First, only sell put options in companies that you'd be proud to own. Not scared to own, happy to own. Second, sell those put options at strike prices you'd be happy to own the stock at, not scared to own the stock at if the stock price crashes. Third, keep your position sizing small enough so that if it's assigned to you, it also doesn't scare you. You want to feel comfortable with all your positions. You want to be able to sleep at night. Sleep is a good thing. And just remember that slow money, steady premium, it's still real money. You can spend it. And a lot of people have become very wealthy with slow money strategies. No, selling put options won't get you rich overnight, but over the long term, it can change your account size, it can change your future, and it can actually change your financial life. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. Most put option sellers worry about how to handle the situation when they've sold a put option and the position goes against them in a big way. I show you how I handle that exact scenario at the video at the link above and the description below entitled Professional Trader Explains the Secret to Repairing Cash Secure Put Options. Until next time, happy investing, and we'll see you again soon.